Hello, this is Dave, and welcome to Equity Story. And obviously, just general advice warning. This is general advice in nature and not personal advice. So, thank you for that. And Wolf, what we are going to do is, first of all, just have a look at a few stories that have announced today,
Mhm.
and then afterwards, and we're going to look at our favorite dividend plays. So stocks, and I quite like you've come up with a dividend portfolio with 10 stocks that
Mhm.
will give an average return of 5.6%.
Mhm.
And hopefully over time there'll be a little bit of growth there as well. So I
Yeah.
look forward to that, and we'll do that in the second half. Now, Wolf, very, very, very quiet today. There
Mhm.
wasn't really much out there.
Mhm.
PlaySide came out again with another very, very positive announcement.
Mhm.
Anything to say about that?
No, look, it's just another collaboration. I suppose they're looking to develop games with a big player in the influencer market. So they've got a lot of gamers in there that got a lot of followers, and so potentially, if they can develop something and they can sell it to their followers, there there is the possibility of more growth coming for PlaySide. So from that point of view, positive. But we won't know, obviously, the outcome of all these collaborations until probably 2 to 3 years down the track.
Um,
Positive,
Wolf,
I like it.
very good. Eagle Mounted came out with,
Mhm.
again, I just have to bring these draw results over, but um, share price not doing much, but you can't complain, can you? 22 meters at 2.84, 65, 69.5 at 1.6. Those are great, great results.
Tough crowd, Dave. Tough crowd.
Yeah, tough crowd to please, but certainly, I mean, from a sort of mining point of view, I think the Eagle Mountain guys should be very, very happy with that. And it's
Absolutely.
just building and building this resource, Wolf, and so they just got
I think
to.
you should just bring up that little slide that you had from page 27 of the last presentation, Dave, with what's going to happen over the next couple of years, because that was quite interesting to see. That I think within the next 12 months, there we go. Come on, show it to everyone.
Yeah,
So
because I think the problem is that it's on. You said to me earlier, you said, Dave, well, people want to see when it's going to be developed, but
yeah,
you know what they do? They put the development time frame on page 27. This should have been on page 1 or 2, which I
yeah.
think would have kept a lot more, just maybe just more interest in the project, and maybe they just need to talk a lot more about the pre-feasibility study and approvals, and so people can really get the idea this project's not too far away, Wolf.
Yeah, and look, I am going to treat this as 2021 as a calendar year, not as in financial year, because of course they are not. These guys are not financial at the moment. So let's treat this as a calendar year. So we've got, for me, the most important thing, right, is scoping study. Let's get that done. Scoping study. So we're looking at middle of next year. So another 6, 7, 8 months away, right, for the scoping study. Then that takes up what, 6 months, and then we're going to move at the start of 2023 into pre-fees, which is the key for me. We need to see what the project's going to, how it's going to stack up against the. Hopefully, it's going to be positive. We've seen all the drilling and so on. As long as the copper price stays relatively positive, which should, with the demand for lithium batteries, then all should be going well. But at least you've got something to work towards, right, with this. And like, I agree with you. I think this should be prominent. It should be spoken a bit more often. But maybe it isn't, because it's still, another 6, 12 months away. And that's why they don't want to talk about it yet. They still want to concentrate on the actual drilling.
Yeah, and I think that they're not looking for a sort of a 10-year mine life. They're trying to build this up to be something a lot bigger, which I understand why obviously Charlie would be doing that.
Yep. But
Um,
anyway, you've got the right there. You can see what's going to happen.
yeah, it doesn't mind you. Look at those mountains. It doesn't look like an easy place to mine, does it?
They probably have to do it from a helicopter.
Yeah, they're just lucky there's no Indians left. Was it the Apache? The
Ouch!
Apache?
Hey,
What?
let's move on. Let's move on. Let's not.
Well, no, I'm just saying in the old days the Apaches would be firing bow and arrows at you.
That's true. They probably would.
Well, I'm just.
But there's a lot of mines around that area, so it's not as if it's populated and people are going to say, "Get off my land," right? I think it's fairly
Yeah,
safe to say that it should be conducive to mining.
yeah, obviously, and obviously we support the Apache Nation. Do I have
Of
to say
course.
that? I think they most probably own most of the land, don't they? They most probably get mining rights or something.
Yeah, like probably like the the natives here in Australia, where you've got, I think they you get some royalties and so on out of their native titles.
Yeah. Anyway, next stock.
First peoples, I think, is the right way to term these days, isn't it?
What's that?
First peoples.
First peoples.
Mm.
Well, it's, who knows who was first anywhere?
Yeah, well,
Apparently, they're saying the Vikings were in America before we were,
yeah, they were. They were. They were back in the 1000 something.
and the Dutch were in Australia before the English,
Yeah, absolutely, they were. And so were the French.
and the Aboriginals were here before the Dutch and the
I was
English.
actually I was actually seeing that's a documentary on who came to Australia first, and there was definitely the Dutch and the French were in before the English. So I don't know how the English managed to snare Australia, but
But,
unbelievable. Dave.
but,
All right, let's move on.
well, they didn't. Right, they didn't realize where they were, though, did they? They just thought,
They must have got confused.
uh, anyway, say no more. It's because there's no I don't know. Maybe they couldn't find any frogs to eat.
No, you know what it was? They were polite. They were said that, look, we found it. We'll come back shortly. And then English went, that's us. Oh, thank you very much. It's flags. It's ours.
Yeah, well, the Polish never found anything. You're too busy.
And then when the French came back, the English went, sorry, mate. We didn't see you here first. Sorry.
Yeah, we're Poland. Your country never discovered anything, did they? I'm surprised they even discovered Poland.
Because we are a very peaceful nation. We don't go and plunder and pillage. We're happy with our little lot and plot. Thank you very much.
You're too busy trying to defend yourself from being invaded.
Exactly. And helping the Europe to survive, because we've done it about 3 times now.
All right, Wolf. AIS just holding above trend again.
Yep.
Sort of a decent announcement.
Mm-hmm.
Okay, let's talk about AGY.
Yes.
So we trended this. It's had some lovely little breakouts, that sort of stuff.
Mm-hmm.
It's we've made money on it. Well, hopefully.
Mm-hmm. Yep.
But you're quite liking the story. Tell me why, Wolf.
Well, look, 2 things. Getting close to production. I think they got middle way through of the lithium brine mine ponds, however you want to describe it, in Argentina, right? So if they can become a producer, it will probably have a huge re-rating. And second of all, very difficult to find a lithium player that's through the development and is still under $500 million. So 350, I think, million bucks, Dave. So from that point of view, it looks all right. So I'm gonna, from fundamental point of view, it looks all right, value-wise compared to the rest, and where they are at with progress. So I'm gonna leave it to you whether you think this is a trade.
No.
All right. Thanks for letting me waste my 5 minutes of talking about it, and then let's move on.
Well, it just needs to do a little bit more. So we'll look at it on the daily. If we can break over 28, so I think people can put it on their watch list and have a look. It just needs to do a little bit more, Wolfie.
No, that's fair enough. And look, at least put it on your watch list, because it's definitely might see a re-rating down the track.
100%. And Wolf, just having a quick look about the traps. Obviously, nickel. We're looking at the commodities. Nickel's holding up very well, and you can see obviously nickel mines. So the nickel stocks are not doing too bad. The lithium stocks holding up very, very well in a pretty difficult market. ORE looking okay, and hopefully INR can go on and do better over the next 3 or 4 days. SLX put out an announcement that they had a shareholder meeting, didn't they, or presentation? It just needs to do a little bit more.
It does. It's probably gonna take some time before the markets maybe pushes it a bit. A little bit of FOMO would help. So I think got to be patient. Like I said, it's a trade. It's an interesting trade, but you got to still stick to the CTM, which is the trend lines have to hold. Otherwise, you're out. Because remember, with any trades, you are reliant on your CTMs. So yeah, we've got to be patient.
Wolf, your stock of the year, Credit Clear.
Yes.
It just came out. Obviously, the share price doesn't look too good, so we're not suggesting buy this. But they just come out with an announcement saying Credit Clear continues global expansion and extends a digital platform to New Zealand. So
I saw that. I went through it. Yeah, it looks good. But like I said, I'm probably about a year or two too early, Dave, with this one. So give it another 12 months and you might see a different picture with this. It's still kicking goals.
So put it on the watch list, and just a little bit too early, but one day there'll be one day it will be a stock of a
One
year.
day Wolfie will be vindicated.
Okay. Wolf.
Yes.
Now, had a lot of questions about dividend stocks, and not a bad time to do this really, with the market looking a little bit up and down, and everyone maybe having a little bit of a break and looking for just dividend plays to sit in. So you've come up with 10 dividend stocks, which give an average return of 5.6%. So quite a nice little return there, Wolf, on average.
Yep.
And I'm going to go through each of the story one by one. We're going to discuss that, maybe discuss, what sort of growth there might be in the story. So the first one is Telstra, where we do like the price action. The share price looks right. It's breaking above trend. This one gives a nice 3.5% dividend. But we do see growth here, Wolf. We can see this maybe over time nudging up to...
The big aircraft carrier is turning around and starting to look a little bit better. Hence, we're looking at definitely dividends. But, the dividends not like they used to be, 7%, where they actually had to pay out of the debt to pay the dividend. So it's not like that anymore, which is good. So they've completely changed around, Dave. So now it's a 3.5% dividend payout, which is decent, but there's going to be some growth now, I think. So time to get in.
Brilliant. Now we've got the next one is BKW, and it's right near the trend line. So maybe a good time to also nibble away.
Wait, I mean, you don't have to get everything straight away. Just make sure it holds first. You don't want to get it and then a week later you go, why did I buy that for? Just wait till it bounces, if it does bounce, and then we reassess. It's just, I'm giving you ideas here. It doesn't mean you have to buy them all right now.
No, but again, Wolf, this one pays a nice sort of 3.8% dividend.
Yep.
But again, what we're talking about, I mean, it's the assets are worth double where the market.
Yeah, and I think they've been increasing their dividends, Dave, for the last 50 years, didn't they? They say that in the last announcement.
Yeah, and this company pays a 3.8% dividend. I thought it was a little. It has special dividends, doesn't it? Quite often.
Sometimes, yep. Sometimes if it has a good year, they'll pay a little bit of an extra thing. But it's let's just stick to the basics. Good growth story. It's had a good run. So at the moment, slightly struggling, but you're buying it for the dividend. Really, 3.8 is good enough for me. And as long as it holds, I'm happy to accumulate.
Wesfarmers, Wolf. So it's had a little bit of a dip, actually, come back down to the trend line, paying a little bit more dividend than Telstra and BKW, around 4.5. A great little growth story. It's got lithium.
Yep.
It's got Bunnings. What more do you want?
Yeah, well, nothing else really, unless they can maybe serve us coffee or something. But other than that, it does very good for us. So it's got a great looking chart at the same time, Dave. So it's got the trifecta.
Right. Now, you've added SUL.
Yes.
It's a very strong little dividend pair, that I must be honest. This is actually holding the trend line very well. This gives a nice little dividend of 10%.
Yeah, look, I've thrown in a couple of retailers. And I've thrown in a couple of retailers that I should still do okay, even though if they can eke out like 1 or 2 or 3% growth, right, per annum. I'm still happy with that, because where else are you going to find 10% dividend, right? Probably nowhere. And the chart is not that bad. It's actually inching itself upwards. So from that point of view, and if you also look at the actual P, it's not expensive at 9 times. So all around, another good little story to potentially hold on to, as long as it holds the trend.
All right. Next one on the list is PTB. Now, they pay a nice 6.7% dividend. So pretty high. And obviously the price action of the chart looks very good. Actually, we're trending this one at the moment. So just remind us why this one's in the top 10, Wolf.
Dave, just a small one to just throw it in there, give you a bit of a, sort of looking at the boring Wesfarmers and everything else, throwing a little PTB, who have recently updated their guidance, which was positive, pay a good dividend, looks cheap, valuation wise, why not? And you're loving the chart, Dave. So why not? Again, another trifecta.
All right, a little bit of growth. So that's going to help give these group of stocks a little bit of growth, isn't it?
Yep.
Next one on this CLW. So we're going to see. We've got two charter halls in this group.
We do. I've got thrown in a couple of. I was going to try to find a couple of different ones, but I thought, nah, these are very good. So I'm happy to put them on.
Yeah, this one sort of it's pretty sideways at the moment. It doesn't hold trend very well, but it's a dividend play. It's a long-term play, and I think some of these really long-term dividend plays, you can have more of a monthly view of these charts if you want. Yep. They're very, very solid, so you can see it holding quite nicely.
You're gonna get 3, 4, 5% growth out of them. That's it, right? But super quality portfolios out of those both of them. So for me, one of them holds all the Coles, Aldi's, Woolworths, right? Properties, steady as she goes, right? And the other one has got all the fantastic buildings that are basically used by governments, by the blue chip ASX companies, and so on. So you've got a really, really solid two charter hall property groups, which pay quite well. Your one is 6.1.
Well, you got 6.1 with CLW and CQR. You've actually got a little bit more, which is around 5.6.
Yeah, a little bit less, 6.1 to 5.6.
Not bad. Those charter halls are really deliver quite nicely, don't they?
Yeah, absolutely.
All right.
It's a better looking chart too.
Next one off the rank, we've got NEC. Now, Wolf, they're not. NEC are about 3.6% dividend. They're trending quite nicely above trend lines. We are seeing some decent growth in the NEC story. Also, I think it just gives this group of stocks something a little bit more in the media space, doesn't it? A little bit different.
Just a little bit diversification. That's all. I was just looking for something a little bit different, away from the property and away from the retailers, right? And of course, this is not bad. It's because it's got some digital assets in there which are growing. So potentially, you never know, this could be maybe the best performing stock out of that dividend stories.
All right. Again, hopefully seeing a little bit of growth, a nice 3.6% dividend. Now, next off the rank is JB Hi-Fi.
Yeah.
Again, we've gone into retail, but JB Hi-Fi have a history of delivering and holding very, very strong dividends, and they're about 6% dividend at the moment. And over time, this story has always, I think, under-promised and over-delivered. It's done very, very well.
Dave, I went to JB Hi-Fi store on the weekend. I couldn't move. It was so packed. Yeah. I just don't understand, right, why it's so wallowing. But it's cheap, right? Valuation-wise, it's cheap. 6% dividend yield.
What's the P it's on at the moment?
Let me tell you. JBH. 11.
Oh, so good. It's good. Yeah, definitely. It's good to see there is some value in our market, Wolf.
In fact, just looking at it, actually, it's telling me the dividend yield is 8.5.
Okay, well, we'll call it 6. We'll
call it 6 because just for the purposes we call it 6. I don't know where the 8.5 comes from. I just have to look, but look, it's good.
And lastly but not least, you've gone for Metcash. So you've left Coles alone. You've left Woolworths alone.
Yes, I have.
And reason being,
it's the cheapest and pays the best dividend, Dave. So that's why I've left it. Like I've moved on from Coles and Woolies. And look at the chart; it's probably the best one of them all, right? So all up, and I think if you're looking for growth, it's not going to be from Woolies, it's not going to be from Coles, it's going to be from Metcash because they are expanding in the countryside, right? So that's where probably you're going to see Metcash probably outperform the rest. So 6.1 dividend yield. I think it's trading on. Let me just have a look again. MTS. It is trading on 17 times compared to I think 20 and 35 or something for the rest.
Well, Wolf, when you go for these stocks, generally speaking, there's value here. I mean, you've come up with a group of stocks that are giving a good dividend where there's reasonable value.
Yeah. Probably you're probably the only thing you can argue against. The only one that's not cheap is Wesfarmers, right? Everything else is thinking yourself, shit, this is like a value portfolio almost. You're absolutely right, it is. So you can double up as both dividend and value.
On that note, Wolf,
Mm.
you must be
Dave,
exhausted.
I think we've hit a nice little portfolio here for everyone's looking for some income.
All right. On that note, listen, Wolf, thank you very, very much, and I think a lot of people will be very interested to look at those stories. On that
Cheers.
note, bye, Wolf.
Bye.